Let's go across to Rajat Kathuria now, CEO of Signature Global, who's joining in for this conversation. Rajat, I want to actually start with the demand question. And how did you see the demand panning out in this quarter? Do you see it improving at all? Because for the real estate sector, right now, the big question has become whether demand is sliding in the top 8 cities at least. Just want to get your perspective on that.
So, Tamanna, I'll like to answer both on supply and the demand side at one go. So, over the last couple of years, the primary challenge has been in creation of supply rather than, witnessing strong demand in the sector. And this has been the story all across at various price points of the housing market. So, as far as the supply side is concerned, we saw very good activity at the start of the year itself. We launched more than 2 million square foot of new products, which added up to about 4,000 odd crores of GDP potential. We completed more than 2,000 units, which are equivalent to some 1.45 million square foot of area. And we've also added some land in our core markets for future launches. As far as the demand is concerned, yes, there are global uncertainties which is causing confusion in the mind of customers, but so far so good. We had a fairly decent quarter. We launched a large project just in the month of June by the name of Cloverdale, and 65% of our overall pre-sales of about 2,600 odd crores for this quarter came from this particular launch itself. So I would tend to assume that so far, yes, I think demand's holding up and we are seeing good customer participation.
I'm just wondering, Rajat, since just to follow up on that, since you talked about macro uncertainties adding to confusion, are you seeing any impact of the job losses that we're seeing in IT sector? But, we're reporting that you're seeing it in other sectors as well. Mid-management, senior management, some of it being replaced by AI, technology, slowdown, whatever it may be. Are you seeing that begin to translate into conversations with customers? Because a lot of these properties will need high-paying, high-earning customers.
Tamanna, not really at this stage, because see, Gurgaon in general is a more diverse market. We are not a city which is just reliant on ITS services. It's a fairly diverse sort of an economy, being, having close proximity to the capital, having a very robust auto market. And, it's a city which has just come up over the last 20 years. So, there's a lot of, upward momentum, in this city where there's a lot of newer areas coming up and getting developed, every 5 years, 10 years. On the contrary, see, we've also seen certain, or rather fair good amount of rate cuts, which has reduced the EMI pressure on the customers and certain tax advantages from a customer standpoint. So there's mix of lot happening. But yes, as of now, we've not seen any dip or anything like that. Rather, the market's holding up quite well. And since we focus more on mid-income housing market, we feel, this particular space in the housing market has a fair bit of resilience because there's genuine demand. There are a lot of people still traveling from Delhi to Gurgaon on a day-to-day basis and taking up a home in Gurgaon where usually their job is, makes their life much simpler and convenient and, adds to their family time. So, we are seeing like a good situation going on as far as mid-income housing is concerned.
Right. Rajat, good morning, Neeraj here. So your base has obviously grown. And in the past, you mentioned about how Gurgaon continues to remain the market which will fuel growth for you for the next few. My question is, a few years that is, my question is, do you reckon that the run rate of growth can peter down with a higher base unless, of course, you expand out of the Gurgaon market as well? Let's say if I'm looking at you from FY26 till FY28, you expect this 25% increase or 25% run rate to continue?
So Neeraj, we feel this 20% kind of plus growth is achievable over a medium-term span. Our primary concentration is in Gurgaon right now. And the primary reason is that, see, it's not just about demand, it's about, meeting out your commitments as well on the supply side. So by staying within a particular geography, we are able to manage the supply side much better. It's very important to commit, make good our commitments in terms of timely and quality delivery of our homes. So we feel much more comfortable by creating a larger position within a market. Yes, since this is just one market which is kind of performing quite well, at some point in time we will add on new markets. But at this stage, we feel there is a lot of work in Gurgaon, and a 20% plus growth seems possible from this market itself, despite the larger base.
And Rajat, you reckon this will be a function of both value and volume, or eventually you might have to resort to one over the other in order to maintain growth? What seems the more susceptible piece of the two?
See, fundamentally, it has to be volume and lesser value. But given the demand supply mechanics, it has been both over the last couple of years. Neeraj, we've been fundamentally a volume player. We started our journey with affordable homes, and we like playing on volume. And I'll personally prefer that it's volume and not value. But, I can't really predict how future unfolds.
Do you think your guidance for this year, the annual guidance, stays on track after Q1, Rajat, in terms of number of launches, up 25%, 20% increase in pre-sales growth, 35% growth in collections, and the numbers there? Does that stay on track right now?
No, it absolutely stays on track, Tamanna. We are planning a couple of large launches within this calendar year. So by October or November, we would have hopefully, we intend to meet out our entire supply-related side situation, which is the launches. And pre-sales, usually happens in tandem with as new products are getting launched. So we stay on track and we stay confident about both these parameters.
Got it. Okay. Okay, Rajat, we'll leave it at that. Thanks so much for taking the time out and being with us. All the best for the quarters ahead.